Good afternoon. The subcommittee will come to order. Before we begin the hearing today, I'd like to take a moment to speak about Mike Gill from the Housing Policy Council. Mike was a tremendous source of knowledge on housing policy to all of us in this room and a good friend to many of those present here today. We appreciate all the work you did to make the lives of veterans better and to impact so many people. We're very sorry to have lost him at such a young age, and our hearts go out to his family and friends. And I would ask you that you join me in a moment of silence, please. Thank you. I want to thank everyone for being here today to discuss the VA's home loan program. As I've said many times, this is not a bipartisan committee. This is a nonpartisan committee, and it's going to stay that way. And I'm very thankful for your cooperation. I just am. VA's home loan program is an important benefit for veterans to achieve the American dream of home ownership. I believe it's essential that we support that dream for our veterans who have served our country. I have used this program myself, and it is awesome. Last year, the VA helped 145,480 veterans to stay in their homes through various programs and communication efforts. This is a great feat, and I do applaud the VA for this on behalf, and like to thank them for from all the veterans. Today, our subcommittee has come together to evaluate the VA's home loan program and its performance in this current competitive market, and this program must be protected. As I said, I've used this, and so have many of my friends. This year, the VA intends to roll out the Veterans Affairs Service Purchasing Program, or VASP, as a new approach to keep veterans in their homes. And I will be honest, I have grave reservations about this proposed program and the unintended consequences this may have on the overall home loan program. And I'm concerned that it could actually ultimately destroy it. During the COVID-19 pandemic, the VA was given the authority to operate a partial claim payment program to address the potential surge in foreclosures for veterans, and there have also been proposals to reinstate this authority as an alternative to VASP. And I want to make it clear, I firmly believe the VA has the best intentions to serve our nation's veterans. VA employees across the country work hard to ensure that veterans use the home loan benefits they have rightfully earned by defending our country. So I am very eager to hear what you're going to say, the witnesses are going to say, and the answers to several questions that will be asked that I have about the proposed changes and how the current program is operating. However, over the last year, the subcommittee has received little information about how the proposed VASP program would operate. We've also received little information about the expected cost of the program, and even less information regarding how much such a program would affect the larger mortgage markets. Recently, we have seen a push from the administration for a moratorium on foreclosures, and we have no idea how that's affecting the markets, and all of this is cause for concern. While VA has promised to be transparent about the program, Congress, mortgage lenders, and veterans have been left in the dark for most of the last year. Even though the subcommittee has asked for multiple brief explanations regarding VASP and has even sent a bipartisan letter, VA has been silent. Our current understanding is that VASP will allow veterans who are at least 2 payments delinquent to refinance their loan down to 2.5% interest, and that the VA would take over servicing the loan. While this program may benefit some veterans who are at risk of foreclosure, it also poses real moral hazards of encouraging veteran borrowers to become delinquent to take advantage of a much lower monthly payment. It also poses a risk for VA and other taxpayers who would become responsible if VA-financed loan ownership experience high delinquency rates. According to the Office of Management and Budget last week, VA could be responsible for nearly 21,000 loans under this program. And this is very concerning to me, as it makes it seem like the program is going to be used as a short-term election gimmick, unfortunately, from the White House, rather than a viable program that would help veterans. Mr. Bell, I'd like to have a follow-up discussion with Josh Jacobs and the full committee chairman to discuss the proposals of this program, and I'd appreciate it if you would communicate that message to him and ask him to arrange that with committee staff. Thank you. I've also heard from stakeholders about the shortage of information on the Veteran Home Loan Program and the rising number of foreclosures. This data is essential to understanding the effect of these programs in the mortgage industry and markets. While I plan to introduce a bill shortly that would require VA to publicly report their home loan data, we need answers on VASP today. These recent concerns and unanswered questions from the VA must be solved before the VA can move forward with VASP in good faith. And VA must also be held to the highest standard to ensure the efficient delivery of benefits without a need for Congress to intervene repeatedly. My focus continues to be on ensuring that veterans remain in their homes whenever possible and on mitigating housing instability in cases where maintaining a mortgage has become untenable. However, the potential delays and issues with the vast program's rollout are concerning, especially given that they could evolve into a financial burden of billions of dollars in bailouts, which would fall on the shoulders of taxpayers to bear. Once again, I thank everyone for coming today. I look forward to the productive discussion on what's going well, and what needs to be improved in the VA. And with that, I yield to the ranking member for his remarks. Mike.
I thank my friend, the chairman, and I really thank him particularly for holding this hearing on a program that has long been one of VA's most important benefits to veterans and has traditionally operated smoothly. We have an obligation to protect our veterans, especially during times of financial distress, to ensure that they and their families don't lose their homes. The VA Home Loan Guarantee Program stood up assistance during the COVID-19 pandemic to do just that, help veterans avoid foreclosure. For those who weren't with the committee during that period, it's worth noting that VA proactively took action without the need for congressional authorization. We lauded that decision at the time, and it likely kept thousands of veterans in their homes during a global pandemic. However, in the last few years, VA ended some of those measures it put in place during the COVID pandemic. That termination has coincided with interest rate spikes, making some of VA's traditional foreclosure mitigation measures less impactful, or in some cases not helpful at all. I understand VA recently extended some of these measures through May 31st, 2024, possibly in response to a letter that Chairman Van Orden and I sent to the agency last month. I appreciate VA's efforts, but I remain concerned with the partial claims program termination, which has forced veterans in distress to choose between foreclosure or higher interest rate loan modifications. I think we all recognize that VA cannot prevent every foreclosure on the loans it guarantees. But we expect the VA Loan Guarantee Office to exhaust every option so that foreclosures rarely happen. That's why it's my goal to leave this hearing with a comprehensive understanding of what authorities VA has, what authorities VA needs, and what VA needs financially to ensure foreclosures only occur in the most extreme circumstances. I have real concerns with the current refund modification program and empathize with the veterans who are trying to navigate it. In agreeing to a modification, veterans are unable to keep the low interest rate they secured before or during the COVID pandemic, resulting in dramatic increases to their monthly mortgage payments. Is this truly an effective way to mitigate foreclosures for veterans who already can't afford their monthly payments? So we're here today to ask the department how we can ensure we're providing a useful benefit that empowers veterans and closes any opportunity gaps that exist with their peers who didn't serve. It's critical that this subcommittee examine whether the department has enough resources to adequately support our veterans. And it's so important that we get this right. And there's absolutely a need to ensure VA has the funding and the employees to efficiently deliver these benefits. So I hope to learn more from you today on the VASP program. And as my friend the chairman said, we need answers on VASP today. Look forward also to hearing from our community partners. I thank you all for being here today. And the feedback from the people you all represent will help us review the process as we focus on serving veterans and protecting their earned benefits. And with that, Mr. Chairman, I yield back.
Thank you, Mr. Levin. I'll now introduce the witness panel. Our witness for this panel is Mr. John Bell, the Executive Director of Education Services at the Department of Veterans Affairs. I ask the witness on our first panel to please stand and raise your right hand. Do you solemnly swear to tell the testimony you're about to provide is the truth, the whole truth, and nothing but the truth? Let the record reflect that the witness has answered in the affirmative. Mr. Bell, you are now recognized for 5 minutes. Please have your seat. And there's some lights in front of you, and that means 5 minutes. So please, Mr. Bell.
Yes, sir. Thank you. Good afternoon, Chairman Van Orden, Ranking Member Levin, and other members of the subcommittee. Thank you for this opportunity to speak with you today about the Department of Veteran Affairs VA Home Loan Program. It's been almost 80 years since those who defeated tyranny at the Battle of Bulge, the Battle of Midway, and other strongholds of World War II returned home and embraced the Service Members Readjustment Act of 1944. Known as the GI Bill, This legislation not only changed the lives of many of those returning men and women, but it also changed the face of America. Using the home loan program, veterans bought 20% of all new homes built after the war. And subsequent generations of veterans, like you, Chairman Van Orden, and your grandfather, Ranking Member Levin, and me, continue to have the opportunity to access this earned benefit. To meet the needs of every generation of the nation's veterans, VA has improved processes, technology, and the use of data to create a competitive loan product. Data shows VA purchase loans are closing in an average of 32 days, while other industry programs are at 44. And while in the past there have been many perceptions that VA appraisals were too conservative, 94% of VA appraisals have met or exceeded the sales price this fiscal year alone. Even though we're improving the home loan program in many ways, one thing will always remain the same. We are committed to helping veterans stay in their home as we are as helping them achieve home ownership. Like other homeowners, veterans face life challenges, such as job loss, divorce, and catastrophic illness, which can derail their lives. When those unexpected challenges happen and veterans reach out for support, VA and loan servicers are equipped to guide veteran homeowners through the steps that they need to take to retain their homes. As an example, last year a homeowner at risk of losing her home reached out to her assigned VA loan technician who helped her apply and secure $20,000 in homeowners assistance funds. But even as we take pride in these strides and success stories, I acknowledge many veterans were and continue to be affected by the COVID-19 pandemic. In 2021, VA quickly leveraged capabilities to build two temporary safety net programs: the COVID-19 Veterans Assistance Partial Claim Payment Program and the COVID-19 Refund Modification Program. Even though the storm of the pandemic has passed, we are preparing to launch VA Servicing Purchase Program, VASP, which is anticipated to assist nearly 40,000 veterans who are at risk of losing their homes. VASP will provide veterans with an affordable, scheduled monthly mortgage payment that reduces debt owed over time at a rate much lower than the current market interest rate. Where the partial claim program provides short-term relief, it may leave veterans with large balloon payments at the end of their loan. Rather than mortgaging their futures for a short-term gain, VASP provides veterans long-term financial security and doesn't burden them with a balloon payment. VASP also ensures the government is better protected from certain financial and legal risks, thus preserving this earned benefit for future generations of veterans. Mr. Chairman, I open today's testimony talking about a World War II veteran. So it is fitting that in my closing remarks, I tell you about a 95-year-old World War II veteran who reached out to us to wage his last battle, which was to retain his home. This veteran fell behind on his mortgage payment and contacted his assigned VA loan technician, who worked diligently and explored every option to advocate for the veteran. I'm happy to report that the loan's current, allowing this veteran the dignity to remain in his home. All of our efforts by our extraordinary staff over the years have transformed our reputation, making VA's home loan program a product of choice instead of the loan of last resort. This prime program truly honors veterans for their immense sacrifices on behalf of this grateful nation. This concludes my testimony. I welcome any questions that you or other members of the subcommittee may have.
Thank you, Mr. Bell. The written statement from Mr. Bell will be entered into the hearing record. We're now going to proceed to questionings, and I ask the members to keep their questioning to 5 minutes. I now recognize myself for 5 minutes. Mr. Bell, did you get a note from my committee staff saying that I specifically wanted you to address VASP in your testimony?
Yes, sir, I believe in my written testimony.
Well, you did in your written testimony. I wanted to hear it. I wanted to hear you say that stuff out loud because you buried the lead. The one contentious thing that we have that is potentially a problem that we need to discuss openly, you completely ignored. You You buried it. You have to get to the 9th page of your testimony before you even address the thing that I'm very concerned about. So, and this speaks to something. I have very little confidence in the Veterans Administration's ability to effectively administer this program that you failed to even mention. And I have concern that you could potentially destroy the VA home loan program and damage the larger housing market. And I understand that you're well-meaning in your intentions. However, the road to hell is paved with good intentions. And I'm concerned that you do not have the authority statutorily in the governing statutes for the home loan program, and that you are simply making this up. And I have concerns now, and I don't care who is in the White House, because this affects our veterans and is not political. And can you please provide us right now with specific authorities outlined in statute that would authorize such a dramatic and drastic change in operation of the home loan program?
Yes, sir. 38 U.S.C. 3732 as an authorization for VASP, as well as our current regulation at 38 CFR 4320.
So you interpret these to allow you to potentially make the American public responsible for billions of dollars in debt? Is that
Those
your
are our
interpretation?
authorities. Yes, sir.
Okay. Well, we're going to talk about that in detail later, because you're wrong. We understand that some express concerns that VASP will target an interest rate of 2.5%, and most veteran borrowers have an interest rate exceeding 3%, and many more recently, because of this of inflation, are significantly higher. Are you concerned that the borrowers will intentionally default in order to receive a lower payment? And if so, what is the VA's plan to address this concern?
First and foremost, we were looking for a solution to be able to help 40,000 borrowers stay off foreclosure. With that, we did put in protocols in our policy that we're trying to get released, and in that they would have to make 6 months of mortgage payments when they did a modification throughout our loss mitigation waterfall.
Okay, so I'm going to ask you this question again because it was very simple. Do you think if you're going to allow, if someone has a 7% interest rate, for instance, and they default on those payments, and you're going to give them a 2.5% interest rate, knocking off all the rest of that stuff, do you think that maybe people would have the propensity to do that?
Well, sir, I think it's irrelevant here that we talk about our portfolio is not at a 7% rate. Our portfolio is 90% right now at almost 90% right now at a 2.5% to 3% coupon rate.
Okay, so I'm going to ask you this question one more time.
Yes, sir.
Do you think if you could essentially refinance a home loan for a lower interest rate for free and stick the bill to somebody else, do you think people might do that? That's a yes or no, because I have 1 minute left.
Well, speaking from a veteran myself who have used this program for 5 different times, I find it, I find it hard to believe that a veteran would go through something as major and substantial as a foreclosure on their credit that's going to be there for 5 to 7 years.
Okay, hey, Mr. Bell, no, you didn't answer that question. And you're really starting to irritate me, because this program has the potential to destroy the entire program by driving the Veterans Administration into the dirt along with other markets. So if you can remove arbitrarily interest rates, meaning capital, from a market because you thought you could statutorily, and you're wrong, you're going to upset the apple cart. And I don't think you have thought this program through. And with that, I yield back because my time has expired. I now recognize my friend, Mr. Levin.
Mr. Bell, I appreciate recent response to our letters on this issue. You indicated that VA is working to publish guidance on the VA servicing program soon, with an anticipated program launch in spring 2024. Can you provide any more specificity on the timeline for rolling the program out?
Yes, sir. We are working every day to try to get an announcement out for what is VASP, the policy documents out to the industry so that they can understand and they can start building their technology to match that that policy, as well as set a target date on implementation later in the year. We are working diligently every day to try to get that announcement out. The policy documents have been completed. We are working as hard as we can to get those out.
And can you run through the options and the costs under the program?
Yes, sir. So the 2.5% rate that we talked about before, we had two options at the industry that we talked to the industry, including the panelists. The second panel, we talked with each one of them over 10 times in this past year, as well as numerous bodies, OMB, Ginnie Mae, CFPB. We had...
Right, I just want to know about the options and the costs.
Yes, sir. And so for the VASP program alone, what it does is it takes the arrears that are owed on the loan. It then puts a term of 30 or 40 years, depending upon what the monthly payment reduction would be for the borrower, and it places those arrears inside of that balance so that they're paying one mortgage over a period of time that's consistent. So it's whether or not it's a 30-year or 40-year term, they're paying that same payment over that time to pay back that debt. So it's not where we are like the partial claim program where we took arrears and then we set it aside and we charge 0% interest rate for that for that money, and then at some point in time there's going to be a balloon payment for the veteran at the 5-year mark, the 6-year mark, where if they go to sell that home, surprisingly now they've got to pay $30,000 or $50,000 to pay off that debt that was secured by the government at the 0% interest rate.
Appreciate that. Running out of time, but wanted to ask you about the refund modification program and specifically ask why it allows for much higher monthly mortgage payments when the entire purpose of the program is to avoid foreclosure due to financial hardship and reduce the risk of repeated default.
Yes, sir. The refund modification program takes into consideration what the market interest rate is today. And because market interest rates have risen so rapidly over the past 2 years, as well as taxes have increased and homeowners insurance have increased in those particular markets, their payments are going up even if they do a refund modification. So the refund modification is yes, to normally reduce their payment and get them into a better situation. Unfortunately, outside market influences
Gotcha. So what are you going to do to make these veterans whole? Because obviously that program's not working as you intended.
So that is why we were, as another part of the loss mitigation waterfall, we wanted to place VASP at the end as it was the last resort for them. So we would go through the loss mitigation options. We put out a circular and policy the other day that said, to the industry, if you are going forward through the loss mitigation waterfall and the borrower gets to foreclosure, and you are trying to foreclose, you need to come to VA before you can do that and let us see what options are available for the borrower to make sure that they have.
What if the veteran's already signed up for a higher interest rate loan modification? What then?
VA has a broad. The Secretary has broad authority in a default situation that we can refund a loan and take it on our books, and we have done this for 30 years.
Last question for you, because I am running out of time. So if you have veterans who are upside down and, unfortunately these programs aren't working as intended, they wind up with higher interest rates, they can't afford their situation, they wind up housing insecure, food insecure, mental health challenges arise. How is your office working proactively with the rest of the VA to help connect these veterans to the services they need?
Again, every veteran's unique, and every situation is unique when it comes to servicing, which is why we need.
not enough. And I'll yield back. Thank you.
I now recognize my friend, Mr. McGarvey, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Bell, for being here today. Obviously, you sense the nature of this panel is to help our veterans, and we want to make sure that our veterans are getting all of these benefits they deserve. But I do want to tell you off the bat, I share the concern of some of my colleagues, particularly when we're talking about foreclosures. Even with the VA taking action with VASP, we know that these foreclosures are happening, and I'm sure you know this as a veteran yourself, as working in the industry as long as you have. These foreclosures have devastating effects on our veterans. They have devastating effects on the families of our veterans. They harm the neighborhoods and communities when they happen. These ripples go out a long way for a long time. So I really think we need to be thinking about and putting the domino effects of inaction or any slip-ups here as we roll out these new programs front and center of what we're talking about. I'm especially concerned about the knowledge gap that might exist as it relates to our veterans using these programs. We bought our first home for the first time in 2007, which seems like a long time ago now. And I know as a first-time home buyer, it's a scary process for anybody, much less whether you're a veteran. And so you talk about dealing with this process, then navigating the process of buying a home, taking out a mortgage, and then dealing with the shifting environment in the VA home loan program on top of that, that's got to be pretty daunting for some of our veterans. So let's talk a little bit about the outreach program in particular. Mr. Bell, what is the outreach strategy to our vets so that they know about what's happening? They know about the current pause in the forbearance repayments, the forthcoming VASP program. What's going on there? What's the outreach look like?
Yes, sir. Thank you for that question. And outreach is tremendously important to us. And here's what we've done. We have, at the 60-day mark, 120-day mark, and anytime an action is taken, we are sending out letters. We are making proactive outreach to veterans. We took this one step further, and we, on any loan that is 90 days plus delinquent, we then also sent out a new letter that basically gives them information about not only VA, but other state programs that might be available to them, such as homeowners assistance funds. We also have information about our veteran banking program. They get free credit counseling, and again, their assigned loan technician in which that they can call. And then we also, again, we send out the policy to our servicers that if they take a negative action from a foreclosure standpoint moving forward, they have to reach out to us and give us an opportunity to make sure that the veteran is given every option possible before a foreclosure happens.
And I appreciate that. My fear, my worry, my concern, that's not enough. We're talking about letters. We're talking about letters that are happening at certain points in time along the way. I'm concerned about what's happening today in real time with our vets, like a hotline that vets could call, a portal, any online strategies. Is there anything like that in development today to help our vets with this process so they don't just have the rug ripped out from under them? Yes,
sir. We are one of the only agencies out there that have our most experienced individuals answering phone calls. They're answering 860,000 calls a year, and or just this past fiscal year. And with that, those are our most experienced loan technicians. So they're not getting a call center. They're getting directly into someone that can help them, because as you stated earlier, it is one of the most trying times in their lives. So we wanted not a warm handoff. We wanted them to speak directly to our most experienced loan technicians when they call. We are also making those outbound calls. We have also put information on our website where veterans can go to, and that's in the letter as well. The links to those websites on how they get more information about the VA.
I appreciate that, and and the time's running out, so I just want to make this point that we need to be doing everything we can. And this outreach is so important in a variety of different ways. I want to make sure you guys are also working with the private mortgage industry and those lenders to make sure they don't misunderstand their roles and are screwing over our vets as well. I'm out of time, though, so I'm going to yield back, Mr. Chairman.
Gentleman's time has expired. I now recognize the gentleman from the state of Arizona, my great friend, Mr. Juan Ciscalani.
Thank you, Chairman. And thank you, Mr. Bell, for being here today, coming to testify for us. As we all know, our nation faces a housing affordability crisis overall, with a shortage of new homes and the price of existing homes skyrocketing. Coupled with high interest rates and inflation, families are finding it harder and harder to find a place to call home. Even more of a concern is how these conditions particularly impact our veterans and their families. I have over 70,000 veterans in my district, and I'll be interested in hearing today how the VA is working to improve the attractiveness of veterans as home buyers, not only in urban areas like Tucson in my district, but also in rural parts of my district, which is, in terms of landmass, the majority of my district. Nearby Cochise County, Greenlee County for me, and Graham County, Susquehanna also. So, Mr. Bell, are you concerned at all that with the level of transparency that appears to be lacking within the VA home loan program? And why is the VA so much less transparent when it comes to home loan data when compared to similar programs administered by FHA or USDA? When looking at a program as large as VASP is proposed to be, how can Congress perform its oversight role if we aren't able to see this data? So a lot of questions in there, but the theme here is the transparency piece. Access to data doesn't, compared to other programs, we would just not have that at the VA. So give me your thoughts and potential solution to that, please.
Yes, sir. Data and data transparency is something that is near and dear to my heart. I actually chair the government agency MISMO standards board right now, and what my goal is for us collectively to share the same data and define the data the same way. I think that's where you see some of the biggest issues and concerns of the industry is there's not a data standard across origination all the way to servicing that is universally accepted. Right now, we're almost there with MISMO, working with MBA, to get that finalized. It usually takes around 5 to 7 years to finalize one of those features, like for origination or for appraisal. For servicing, we've asked for that to be done in 18 months, and we have raised our hand to work so that we can do that. Because once we do that, we can now tie in the data from performance on how a loan performed with how it was originated. So we can start seeing key trends and get information on how to train better and make more and give more education to where we need to have the education.
Well, I'm looking forward to seeing how that works. I think this is key and important. On the same kind of tone here or vein, are you aware if home sellers are statistically less likely to sell to a veteran, and what data exists on this?
Thank you for this question, sir. I testified here in December of 2021 on the veterans issues in the home in buying homes. I testified with NAR, the National Association of Realtors, and from that hearing, the thing that is the primary theme here is real estate agents are the primary guardian of the veteran through that home loan process. Through that
So I'm sorry to jump in because I only have one more minute, but is there data on that? Like specific data on if sellers are less likely to sell to veterans?
What we're showing is it's misperception, right? It's again, as I stated earlier, when 94% of your appraisals are at or exceeding market price, sales price, that's a pretty good indicator. The other indicator is we lead the way in the market. 86% of veterans that start an application close, which is
So different
one of the
pieces of
highest.
data in there, not one specific on that. One more question. How does the shortage of VA home loan appraisers impact rural veterans in particular, and how can we modernize this process?
We have nationally, since we had the 7735 legislation that came from Chairman Boss last year.
The gentleman's time has expired. I now recognize the gentle lady from the great state of Illinois, Ms. Ramirez, for 5 minutes.
Thank you, Chairman. If you have, it was one sentence to wrap up, you can do that, but it just got 10 seconds.
Thank you so much. All I was going to say is we have reduced appraisal timelines by 49% since last year, and we're delivering appraisals in 6.7 days, and again, closing loans in 32 days. So the data shows the VA home loan program should be the product of choice.
Okay, thank you. So housing is one of the most important issues for me, and actually one of the reasons why I came to Congress. During the pandemic, we saw the importance of being able to provide resources, particularly to our veterans who, for one reason or the other, were seeing some of the highest housing insecurity levels we had ever seen. And I know we like to say that the public health emergency ended on paper, but the reality is our veterans at home are still feeling the impacts of COVID-19. You know, I think of my district in the city of Chicago, and certainly we see it everywhere. People who have lived in our neighborhoods, who are trying to keep their homes, are struggling. But veterans who want to purchase their homes are also struggling finding affordable home ownership. So this issue, and particularly talking about loans today, is really important to me. And I know that the VA implemented the COVID-19 Veterans Assistance Partial Claim Payment. Let me say it again. The Veterans Assistance Partial Claim Payment, PCP, and the COVID-19 Refund Modification, Loan Modification. And I understand that both of those programs have been successful. So as the VA continues to work on programs to prevent veterans from experiencing homelessness, Mr. Bell, I do have a few questions to ask you. So can the VA require loan services to accept ongoing monthly payments if the veteran is behind or delinquent and in danger of foreclosure? Let me restate that for you, just to make sure that you understand the question. If I say it another way, can the VA require servicers to accept payments that are less than the full payment? So for example, we know that there are situations where a veteran had a series of months in which they weren't able to make their payments, but now they're in a better position to start making payments again. However, the veteran can only afford to pay the monthly amount, not the rest of it, that would cover the costs associated with the months prior. Can the VA require servicers to accept those monthly payments, even though it is not the total amount owed or outstanding?
There are cases that we certainly can. There are some limitations, and those limitations will be found at 38 CFR 36.4316. So it is a regulation. So 36.4316 is the
But it's
regulation
possible.
that is the authority.
Okay.
So there are some drawbacks and that we have in that regulation that we that monitor that. So it's a case-by-case type situation.
So let me ask you this follow-up question. Does the VA have the authority to place a moratorium on foreclosures?
We just placed a foreclosure moratorium as of December, or in December to May 31st.
So it is already using that authority?
Yes, sir.
Okay.
Or yes, ma'am. So-
Got it. So let me ask you another question. Regarding the waterfall process, we understand there are different stages in this process. I'm trying to get a little more sense on some specific numbers. Can you provide me the number of veterans who are 60 days delinquent, 120 days, or even in forbearance? Do you have those numbers?
So I have, so basically we looked at the 90-day and greater, which is 65,000 borrowers,
So 65,000 borrowers are 90 days delinquent.
90 days or greater. Yes, ma'am.
And so is there a way for you to follow up and try to get me information who's in that, between that 60 and 90?
Yes, ma'am.
Okay, thank you, I'd like that. And then let me just ask you my last question in my 41 seconds left. Do you think that the banks and servicers have a duty to mitigate potential loss by accepting partial payments?
Do they have the option to do that? Yes. Is it
No, a duty.
a duty
A
to
duty
do
to
that?
mitigate potential loss by accepting partial payments.
When I would say it's not industry practice, and what we have seen where you are accepting partial payments. Is it possible for them to accept them? Yes. It is a
I'm out of time.
Gentlelady's
but
time
thank
has
you.
expired.
Thank you.
We are going to move to a second round of questioning. Do you have any, or you want me to get ready to?
I think we have another one.
Okay, I now recognize myself for 5 minutes. Mr. Bell, in your testimony, you said that the median home price is $386,000, and using the number and multiplying it by the number of loan potentially eligible for VAST, which is 27,000, that means that the VA is going to be servicing over $15 billion in loans. And are you concerned that the long-term effects of you putting $15 billion on your books may have a detrimental effect on the Veterans Affairs Administration, and in particular, the GI, the ability for us to exercise our GI benefits to get a home loan?
Sir, that answer is unequivocally, of course I'm concerned. Yes, sir, I'm always concerned. I was concerned when partial claim program certainly took us into a positive subsidy for the first time in 30 years. So it is not, what I focused on and what we focused on in developing this policy was saving 40,000 veterans from foreclosure.
Okay, I
What was the
understand.
best
Mr.
way
Bell,
to do that?
okay. You fill about, I'll do a third round of questioning.
No, sir. Yes, sir.
You know what? I'll be here by myself with you. I Googled who sets interest rates while we're sitting here because I thought I maybe missed something. And you can do it here if you'd like to. The Veterans Affairs Administration didn't come up. Like, you're not here to set these interest rates. How did you come up with 2.5%?
Sir, we can set interest rates when it's in our own portfolio. So when we are, when a
But
loan
you're
is in
expanding
default,
into other people's portfolio. That's my point. You don't get to set mortgage interest rates. If this was a veteran to you transaction, we wouldn't be having this conversation. But this is a veterans to you to some other people that are going to be on the next panel here. You're entering into another thing. You're going into uncharted waters that, again, you don't have the statutory authority to do so. How many full-time employees administered this program?
full-time employees total for the loan guarantee program, sir?
Yeah.
A little over 900.
So 1,062. So how many of those people will be focusing on VASP?
We have right now, we'll have a team of 12 individuals that will be monitoring the contract of the work that that the subcontractor and the contractor do for servicing.
Okay, so in other words, you're going to have 12 full-time people watching contractors. How many contractors?
Sir, I don't know the
You
exact
don't.
number of that.
That's what I'm talking about. You have not thought this through. So let's just say you didn't have contractors. You'd have 12 employees servicing $15 billion worth of loans. So I'll ask the people on the second panel, you write that down? How many people would normally, watch after $15 billion worth of loans? You know what? That's really all I have for now. So I will yield to Ms. Ramirez, my friend from the great state of Illinois.
Thank you, Chairman. I think it's just following up from the questions we were asking a little earlier. I want to ask two more questions, Mr. Bell. One is, What has VA been instructing loan servicers on the forbearance moratorium?
To make sure that before they get to foreclosure, that they're coming to VA because VA might have other options that we can exercise, and we want to make sure that all of the options that they have been exercised correctly.
Okay. And then let me ask you a follow-up on that. Has the VA heard of any situations where servicers are still attempting to force veterans into loans at 7%?
That is through a modification program, and the modification program would, again, it goes off of current market interest rate. So if they are at, let's say they are at 3% or 5% or 4%, whatever they are currently at, that modification would go at whatever the current interest rate would be. So again, that's part of the loss mitigation waterfall. So if that issue doesn't work, and to be honest with you, a veteran should never, and a servicer should never force a veteran into any modification program that a veteran doesn't want to go into. At this point in time, that's why it's a loss mitigation waterfall. It is what option will be best suited for that individual, for that veteran at that particular time.
Got it. So, Mr. Bell, let me ask you then one last follow-up on this. So if, let's say, a veteran, for some reason, ends up with one of these really high-interest loans, are they eligible to be able to apply for the VAST program so they can reduce that interest rate?
They possibly could if they hit if they make the other qualifications.
Okay, so let me just shift gears for my last question, and this actually goes back to connecting the veterans to services. Veterans who are foreclosed upon or whose monthly payments increase under the refund modification program often face significant challenges to their housing security. Certainly it's connected to food security, mental health, and more. So tell me a little bit more about how your office is working proactively with the rest of the VA to help connect these veterans to services that they may need.
It's a great question. We actually work with the individual regional offices and healthcare centers that have trained staff that are able to talk to the veteran in whatever need that they have. So if it's a fear of facing homelessness, if it's we get them contacted with the homeless coordinators. If it is where they need help in a specific need, we also contact that regional office, and we find out where we can help at that point in time. So we work together.
Okay. Well, thank you. These were my questions, Chairman. I yield back.
Thank you, Mr. Ramirez. I just want to wrap up this panel here, and if you have something else you just want to comment on when we're done. But it was clear from your written testimony, which I read in detail and took a whole bunch of notes, and from your oral testimony today, that the Veterans Affairs Administration has not thought this program through. You have not. And you're dealing with $15 billion, which is a tremendous amount of money. I want to be also crystal clear that the program that we have, that I have used with my family to get home, is awesome. And I will do just about anything I can to protect that. And you said in your testimony that you understand that you are accepting risk by doing this. And you're risking a hell of a lot more than you think you are. So I am not going to support anything that could potentially remove what I think is the second best benefit for veterans, the first being the GI Bill. So I don't believe you have the statutory authority. If you do, which we deep dived, and I don't think you do, but if you can show me justified that you do, we need to remove that, because there is no way you are going to be able to take on $15 billion of potential loss because you think this is a good idea. And I'm going to tell you this right now. You're not doing this program. You said you want to start this in spring 2024. You're not doing this without my permission. And that is not a request. And it doesn't matter who's sitting in this chair. If Ranking Member Levin, if the Democrats take control of the House, you're not going to do it without Mr. Levin's permission. That is not a request. So you are not going to be legislating from your bureaucracy. And that's what you're doing. And that is unacceptable. And you are excused, sir.
Thank you, sir.
If the second panel please takes their seats. We're going to take just a short break. If you want to get some water or something, that'd be great. On our second panel, we'll hear from the following witnesses: Mr. Ed DeMarco, President of the Housing Policy Council, Mr. Mark Jones, Chairman of the Mortgage Bankers Association, and Mr. Sharp, Senior Attorney at the National Consumer Law Center. I'd like to welcome you here for the second panel. I'm going to tell you right now, take a deep breath. You're fine. Okay, it ain't going to go this way, or like the other one. I wanted, geez Louise. Will you guys stand up and raise your right hand, please? Do you solemnly swear that the testimony you're about to provide is the truth, the whole truth, and nothing but the truth? Thank you. Let the record reflect that the witnesses have answered in the affirmative. Mr. DeMarco, you are now recognized for 5 minutes to deliver your testimony.
Thank you, Mr. Chairman, members of the subcommittee. Thanks for the invitation to be here today. It is past time that the issues facing the VA loan guarantee program, especially those involving assistance to VA borrowers facing hardship, receive this level of congressional attention. The three organizations represented on this panel, the Housing Policy Council, Mortgage Bankers Association, and the National Consumer Law Center, both together and individually have been engaging with the team at VA for years, focusing on options for assisting VA borrowers delinquent on their mortgages. At the end of my written statement, you'll find a list of HPC correspondence with VA the past several years. Many of these letters were co-authored with MBA, NCLC, or both. We have offered numerous recommendations to VA, and for myself, I'm disappointed with where we are today. While my written statement touches on both origination and servicing issues, I want to provide you here a few thoughts on servicing. First, the team at VA has been and remains approachable. We are grateful that they engage in meaningful discussions, and we have no doubt that their intent is to operate the program in the best interest of veterans. Second, the VA program has grown enormously since the great financial crisis and today represents roughly 10% of all mortgage originations. No longer a niche product that can get by with its own sets of rules and practices, the VA loan guarantee is a meaningful option competing in a marketplace with other mortgage products. Third, Congress should provide VA with the resources and authority the agency needs to ensure veterans have servicing options at least equivalent to those available to borrowers financed through FHA, USDA, Fannie Mae, or Freddie Mac. Put another way, to operate an effective homeownership benefit program, VA requires resources to maintain strong risk management practices to support its growing market share, to operate soundly within the U.S. housing system, and to keep pace with private sector innovation and best practices. Fourth, the options VA makes available to mortgage servicers in assisting VA borrowers behind on their mortgages falls short of those available to similarly situated homeowners whose loans are backed by FHA, USDA, Fannie Mae, or Freddie Mac. This is not acceptable. Whatever the reason for it, whether the VA lacks the legislative authority, lacks the funding, lacks the human resources, or some other reason, this cannot continue. I'd like to expand a bit more on this last point. While the CARES Act in March of 2020 gave VA borrowers the same opportunity as all other homeowners to obtain mortgage forbearance at the outset of the COVID-19 national emergency, VA was slower than other mortgage programs in setting up suitable off-ramps at the end of a borrower's forbearance period. In October of 2020, HPC and MBA jointly wrote the VA requesting they establish a partial claim option as a way of dealing with forborne loan amounts while allowing borrowers to resume making their scheduled monthly payments. Simply put, the partial claim defers the previously missed payments without interest until the loan is paid off or the house is sold. All the other federally related mortgage programs offer this option, which is particularly suited to families that recover from a temporary COVID hardship and can resume making their mortgage payments. VA began offering this option in July 2021, but sunset the program in October of 2022, despite there being thousands of veterans remaining in COVID forbearance or still needing a post-forbearance resolution. While we understood that VA intended for the VASP alternative to be a replacement program, it has been 16 months and we're still waiting on VASP. HPC members remain committed to the success of the VA loan guarantee program and to providing VA borrowers foreclosure avoidance options at least as effective as those available to borrowers in loans backed by FHA, USDA, Fannie Mae, and Freddie Mac. I hope today's hearing helps push us forward to that end. Thank you.
Thank you, Mr. DeMarco. I now recognize, the chair now recognizes Mr. Jones for 5 minutes.
Chairman Van Orden, Ranking Member Levin, and members of the subcommittee, thank you for this opportunity to testify today on behalf of the Mortgage Bankers Association. My name is Mark Jones, and I am the president of Union Home Mortgage, a national independent residential mortgage lender. Union currently services $23 billion in residential mortgage loans, which includes VA loans. Previously, I co-founded and ran AmeriFirst Home Mortgage, a privately held mortgage lender headquartered in Kalamazoo, Michigan. I am here today in my capacity as chairman of the Mortgage Bankers Association. As a lender with deep personal knowledge, originating, securitizing, and servicing VA home loan program mortgages, I'm honored to be appearing before this subcommittee. MBA appreciates the subcommittee's focus on the current state of the VA Home Loan Guarantee Program, including a review of the agency's procedures, governing mortgages, appraisals, refinancing foreclosures, and the Veterans Assistance Servicing Purchase, or VASP program, which is scheduled for release later this year. MBA is pleased to offer recommendations designed to help improve various home loan program elements and ensure that our nation's veterans receive a high-quality home buying experience in a challenging, changing, and competitive market environment. At the outset of my statement, I want to underscore that MBA and its many individual member firms who originate and service VA loans have a positive and productive working relationship with the agency, one forged over many years of partnership. The VA Home Loan Program is one of the most significant benefits that our nation's heroes earned through their sacrifice and service. MBA recognizes the need to make this important program more accessible and as competitive as other mortgage loan options. Such an effort will involve reaching a bipartisan consensus in Congress, dialogue with the VA, and key market participants and advocates. MBA looks forward to playing a constructive role. We were pleased to see the enactment of the Improving Access to the VA Home Loan Benefit Act during the 117th Congress. This has resulted in positive reform, including the expanded use of desktop appraisals, as well as proposed improvement to VA's minimum property requirements, which has long been known to hold up transactions. However, housing markets across the country are still supply constrained and continue to favor sellers. There is more that must be done to strengthen the home purchase offer backed by VA. I want to emphasize three key ways MBA believes the VA Home Loan Program can be improved. The first is to have VA roll out a permanent partial claim option. A partial claim enables veterans to resume making their regular payments while deferring their missed payments to the back end of the loan. It is a crucial loss mitigation tool that exists within every other governmental loan program, but is missing from the VA arsenal. Mortgage servicers need this option to deliver timely payment relief to distressed veteran homeowners and preserve affordable home ownership. Action by Congress is needed to make this essential option a reality. Language authorizing a partial claim is contained within S. 3728, recently introduced by Senators Tester and Brown. To be clear, the best and most durable loss mitigation framework for VA loans would to be include both the partial claim option and implementation of VASP. Another recommendation is to tie the level of VA home loan funding to the actual credit risk within the program. To do so would make the cost of the program cheaper and allow more veterans to be able to purchase a home in the midst of this national housing affordability crisis. A third opportunity is to delegate management of the VA appraiser panels to lenders, the same way the process works for every other loan program. VA's insistence on tightly managing its own appraisal roster significantly slows things down, making purchase offers backed by VA less competitive. An additional recommendation is for the VA to adopt a drafting table process and collect real-time input on new initiatives from stakeholders, similar to the one used by FHA. In closing, MBA appreciates this opportunity to comment on the many of the critical issues that impact the VA Home Loan Program, including the need for potential legislation to implement needed statutory changes. We look forward to working with Congress to help provide the VA with the resources necessary to implement these changes, and I look forward to answering any questions that the committee may have.
Thank you, Mr. Jones. I want to say that both Mr. DeMarco and Mr. Jones's testimony will be entered into the hearing record. I now recognize Mr. Sharp for 5 minutes.
Thank you. Chairman Van Orden and members of the committee, thank you for the opportunity to testify on behalf of the low-income clients of the National Consumer Law Center regarding the state of the VA Home Loan Guarantee Program. I am a senior attorney at NCLC, and this testimony is focused on VA servicing issues. It is grounded in our advocacy and our work with legal aid attorneys and housing counselors across the country. It is a bedrock principle of federal housing policy that borrowers who are facing financial hardship should have access to workout options to avoid foreclosure. These home retention policies provide stability for homeowners by giving a path to recovery after financial hardships and provide stability for neighborhoods that suffer when foreclosure hits. These policies also help investors avoid losses, which supports the health of the programs. These policies do not guarantee that all borrowers who fall behind can avoid foreclosure, but they help prevent unnecessary losses. Unfortunately, since October of 2022, homeowners with VA guaranteed mortgages facing hardship have had limited options to retain their homes. This is the result of a recent dramatic increase in mortgage interest rates and a decision by VA to discontinue a program called the partial claim, which had allowed homeowners who could resume their mortgage payments to repay the missed payments at the end of their loans without an increase in their interest rates. The rise in mortgage interest rates has created significant challenges for FHA, USDA, and the government-sponsored enterprises, but they have all retained programs like the partial claim. In contrast, VA no longer has such a program, and we have seen VA's current loan modification program result in increased monthly payments, which are generally not affordable. A series of stories from NPR shows VA borrowers struggling to reach a foreclosure alternative that is affordable and highlights borrowers who have faced dramatic increases in their mortgage payments after a modification. NPR shared the story of a veteran borrower receiving a modification that increased his mortgage payment from $1,750 a month to $2,400 a month, and we have seen similar in our work with legal aid attorneys. Borrowers shut out of affordable options and struggling to keep up with higher payments. These problems have broad significance. As of the end of December 2023, we estimate that there were about 74,000 VA borrowers who are either seriously behind on payments or in the process of losing their home. The mortgage relief options available for veteran borrowers are less favorable than the options available to other federally backed borrowers. The VA program is a benefit that veterans have earned through service and sacrifice, and that is meant to give them housing stability. There must be a system in place to effectively assist veterans when they fall behind on their loans. We recognize that VA may need to adopt criteria that meet the specific aspects of its program, but that should not result in VA borrowers having worse options than other federally backed borrowers. We applaud VA for recognizing the problems that its borrowers are facing and for implementing a foreclosure pause until May 31st, 2024, to give borrowers a chance to access programs that are in development. However, the pause is only meaningful if VA puts options in place that veterans can access before losing their homes. We urge VA to take several key steps. VA should immediately release the previously announced VA Servicing Purchase, or VAS program, and ensure that the program is accessible, includes criteria that account for the recent lack of options that have led to growing arrearages, and provides targeted payment relief. Because VAS will not be a one-size-fits-all solution, VA needs to develop further options, including the reestablishment of a partial claim program that allows borrowers to resume their payments without a change in interest rates, so that its permanent system for helping borrowers provides meaningful relief in all market conditions and secures the financial health of the VA program. In developing these alternatives, we urge VA to work with elected officials, veteran service organizations, consumer advocates, industry representatives, and others to identify the resources it needs to implement these programs so that Congress can ensure that funding constraints do not stand in the way of enabling veterans to save their homes. And VA should start releasing timely and consistent data on its loan performance using FHA's reporting system as a model. These steps are necessary to provide veteran borrowers what they deserve, a program that honors their service by providing housing stability even in the face of financial hardships. Thank you.
Thank you very much, Mr. Sharp. Mr. Sharp's testimony will be entered into the record. I will now recognize myself for 5 minutes. So let me ask you guys this question. So a veteran stops paying his mortgage, and we want to pause the foreclosure, right? And let's say there's $100 on his mortgage, right? I was a listed guy, so that's about as good as my math is going to get. So if there's $100 there, who is floating that $100?
Right now, it's the servicing lender, because the lender, those loans generally end up in Ginnie Mae-backed securities, and so the lender has to sweep that payment whether they get it or not. So the lender is forwarding that payment along.
Did you want to say something, Mr. DeMarco?
Same answer.
Okay, so let me get this straight. So the veteran stops paying for whatever reason, and then that money sits here. If this program went through, the ill-thought-out program that we're talking about, where would that $100 go? Who would float that $100 then?
We don't really know because we haven't seen the details of the program yet. We're waiting those, so the details have not been shared with us yet to where we could answer that question.
So you're saying that this wasn't well thought out. Okay, I know where it's going to go. That $100 is going to go on the VA's books. So it's good for lending institutions because you got a poorly performing mortgage. You get that off your books, that improves your bottom line, and it goes to the American taxpayers and sits there, correct? Where else would it go, man?
Not quite, because during the period of time, the trial mod that the director talked about, the lender, if the borrower fails on that trial mod, then the lender ends up with that on their books.
Okay, but
Because they purchased the loan out of the Ginnie Mae security.
Yeah, so, but if they have $15 billion worth of stuff, they're managing
I hear
these
ya.
loans. All right, now let me ask you a philosophical question. I'll start with you, Mr. DeMarco. Do you believe in private property rights?
Yes, sir.
Mr. Jones?
Absolutely.
Mr. Sharp?
Yes.
Okay, so if the VA is floating $15 billion worth of mortgages and the veteran stops paying it, that means that the government owns the private property, which means by definition it's no longer private property, it's public property. So if you have private citizens living in public property, because there's no way the VA is going to throw these vets out. So you're going to have private citizens living in public property in perpetuity, and they tried that before in the Soviet Union, and they destroyed their entire economy by doing so. And I'm not Nostradamus, but I can see the future here. Do you guys see something different than me? Mr. DeMarco?
No, Mr. Chairman. The incentives that are created by this program and the risk that it poses to taxpayers are real. In fact, the three organizations sitting before you together sent a letter to the VA in December of last year outlining concerns with what some of these program characteristics of VASP that we were hearing about. We haven't, as Mr. Jones said, haven't seen this yet, but from what we've been hearing, it raises some real concerns, and we outlined that to the VA secretary back in December.
And did you get any feedback?
No, sir, I don't believe we've heard back.
We have not.
Mr. Sharp?
I don't believe there's been a response to our December letter.
Okay, so you have, I mean, you gentlemen are obviously, smarter than the average bear. You come from, reputable organizations. How many people have you housed between you? I mean, a gazillion, right? And so you, the subject matter experts, wrote the non-subject matter expert a well-meaning, well-intended, probably very informative, detailed note saying that, oh, by the way, you're essentially creating socialism in the United States because that's where it's going to wind up, and they didn't even bother to get back to you? Okay, guess what? That's an issue. So do me a favor, send us what you sent them, and I will email that directly to Dennis McDonough. Okay? That's swell.
We certainly will, Congressman. Thank you.
Appreciate that. Okay, I yield back, and I now recognize the gentle lady from Illinois again, Ms. Ramirez.
Thank you, Chairman. I also want to thank the three witnesses that are here with us today. I mean, you heard me say before, and certainly housing is a very critical issue for members of this subcommittee. Before I came to Congress, I was the executive director of a homeless service agency. So I got to work with a lot of veterans who were already experiencing homelessness. The idea of purchasing a home was just unimaginable for them. And that's why in my time in the state legislature, I worked a lot to ensure, particularly during the pandemic, that we would pass legislation that kept people in their homes. In the state, I actually negotiated a foreclosure moratorium with banks at the height of COVID-19 pandemic. We did a lot of negotiation until about 2 a.m. to get there, but we did it. So I understand how important it is for the industry and government to work together for the people. And I want to say thank you, all of you. I actually worked with Shriver at the state level, so it's good to meet you, Mr. Sharp. So that being said, I heard Mr. Sharp say there are about 74,000 VA borrowers who are just a paycheck away and at risk of, or actually even closer to that, at risk of losing their home or already in the process. And we know that with the COVID forbearances, even with the resources that people had, there's still at least 34,000 people at this moment who are already delinquent. So I want to go to some of my questions I have here for you all. And this one is actually a question for all of you. And this question is to address, I want you to articulate the value of having private industry in the loan guarantee programs. And as a follow-up, I guess my question specifically is, should the VA have a greater role in lending? And would that afford the VA more flexibility in offering assistance to borrowers? I'll start with you, Mr. Sharp.
Thank you. We, at this stage, with borrowers lacking real alternatives to avoid foreclosure, we do think that VA's involvement with VASP is necessary right now because there aren't other options available. We do think that there should be options that come forward, the partial claim specifically, because we do not think that VASP is a long-term solution and that the VA's involvement with loss mitigation is a long-term solution. Because of the issues of financial health of the VA, also because VASP is going to involve servicing transfers, taking people with the servicer they know and transferring them to another servicer, to the government servicer. We don't know what that's going to look like right now. So we do think while VASP, because we have not had options for the last 16 months, is necessary, we don't think that VA's involvement in taking foreclosure alternatives on is the right path for the permanent solution, that it could be a part of it, but that we need to have other options available and we need them as soon as possible.
Okay, so just to follow up, and actually this question is for both you, Mr. Sharp, and Mr. DeMarco. You both made the point in your testimony that the VA loan program has less favorable loss mitigation tools than other federally backed loans. Could you explain in the minute that I have the differences in options available for those in financial distress and why they exist? And I'll continue with you, Mr. Sharp, and then make sure that Mr. DeMarco gets in.
Thank you. It's because there is not a partial claim program right now to simply allow borrowers to resume their mortgage payments once they fall behind. VA does not have that. FHA, USDA, and the government-sponsored enterprises have a similar program, a partial claim type program, and that is really what's making such a big difference in this high interest rate environment. I can pass it over to Mr. DeMarco if anything else.
I mean, that's certainly central to this, but also the way partial claim is done by the VA versus done by other entities is different. And then going beyond that, look, all these mortgage programs are facing, how do I assist a borrower whose note rate that they can't pay is 3.5%, and now we're in a 6.5% or 7% environment, and the solutions that, this VASP solution, as best we understand it, could use some improvement from what other programs are actually doing to address that same issue.
Got it. Thank you, Mr. DeMarco, and all of you. I yield back, Chairman.
Thank you, ma'am. I just want to wrap up here. As the chairman of the subcommittee, I'm responsible for this program. You know what I mean? So I'm responsible for trying to help get veterans in homes. I'm also responsible for homeless veterans. I want to keep veterans over here, not over here. And there are a whole lot of, I don't know what's going on here, right? And if you guys don't know what's going on here, do you think the VA knows what's going on? They didn't even reply to your letter. So I have no confidence, none, zero, that they would be able to administer and run a $15 billion book. And then we're going to devolve into what I said, because the VA is not going to be kicking people out of their homes, default or no default. Then the government owns the property. It is no longer private property. It is public property. Private citizens living in public property was tried in the Soviet Union. I will not be signing up for that anytime soon. With With that, I yield back, and I'd like to recognize Ms. Ramirez if you have any closing comments.
I think just in closing, I think to you and the panel before, you hear the commitment we have here to our veterans. We want to make sure that in the programs that we have, that we are making it more accessible for our veterans to purchase homes at the interest rates that are affordable to them, and certainly that's why those lower interest rates are so important. I think the second piece of that is when we see with cost of living going up and other challenges, veterans are at risk of really being able to keep their home, that we have the resources in place to ensure that they're getting the adequate resources. So I do look forward to working with you and certainly continue to work with the chairman and the rest of us to make sure that we do everything possible so that our veterans, when they're coming home after what they've gone through, have a home, right, are not risk of homelessness, but also that they have the adequate resources, and that you, particularly those of you in the private industry, are working in partnership with us to make that happen. So I look forward to that, and I thank the chairman for the opportunity to be part of this hearing. So thank you, and I yield back.
Thank you, Mr. Ramirez, and thank you guys for coming out again today. And thank you, Mr. Bell, for staying around. I appreciate you listening to these cats. I ask unanimous consent that all members have 5 legislative days to revise and extend their remarks and include extraneous material. Without objection, so ordered. This hearing is now adjourned.